Hey everyone, LT here, bringing you another quick vlog. This one's about insurance. Last fall I turned 40 years old and I was checking out to see if I got insurance discounts. And actually I didn't. And I was kind of surprised. I ran all the numbers with the different companies and I wasn't getting any discounts because of my age. And all the companies were within about $50 of each other for the whole year. So I was like, well, I guess I gotta wait till maybe 45 or so. About 6 months goes by and my coworker reminded me my cell phone contract was up. And I was switching companies from T-Mobile to Cricket Wireless. T-Mobile has faster data, much faster data. I averaged about 14, 16 megabit a second on average on a 3G connection, which was pretty good. But they charge $74 a year with all taxes in New York State. Or $74 a month, excuse me. And Cricket Wireless charges $45 a month. So you save $30 a month switching companies. I knew that Cricket's owned by AT&T, and I know that AT&T slows data down. And sure enough, when I switched companies, I was only getting about 7 megabit a second. But it's fast enough. I mean, it's still fast enough to stream video and everything else. So to me, it's worth saving the other $30 a month. But when I did that, I decided I'll check insurance companies again. And as most people who know have tried recently, when you go to check insurance quotes online, they will not tell you how much you're going to pay immediately. They will email you back later. And that has always annoyed me because their checks are done literally in seconds with the computers. And the reason why they make you wait is they run your credit. And even if you pay your bills on time and you haven't repaired your credit, if you got a bad credit score, they'll jack your prices up, which to me has always been really angry. I can understand when you're going with a company new for the first time that they could give you some crap. Your headlights out, buddy. But you know, it's like, say I'm with a company and I make all the insurance payments on time. That's what should matter, not your credit score. So that's always ticked me off. But sure enough, I was checking around and I've had Allstate for over 10 years for my car, my motorcycle, and my renter's insurance. And when I check, I couldn't believe the numbers. It was like $860 a year less money for just my car insurance. I got a subcompact car, and I couldn't believe it. I'm like, what the heck? I had a pickup truck previously, and I went for the pickup truck, which was cost me about $66 a month for full coverage with 200 deductibles, and same coverage on the car, which is worth half the price of $15,000 subcompact versus a $28,000 pickup truck. My insurance increased to $106 a month. And they said because it's a subcompact. And you know what? That's crap. The car's worth half of what the other vehicle is. I should be paying half the insurance. It's as simple as that. What they're going to be writing off is a dollar value, not the size of a car. So I'm like, you got to be kidding me. $800 plus dollars, something's wrong. So I decided, what the hell? I read all the coverages, and they were the same. So I took the chance and took the policy, got it online immediately. I waited like 2 days just to make sure, all the paperwork and stuff went through, and then I canceled my other insurance. And a few days later, the State Farm agent, whom I'd switched to, called me and said, hey, I can save you a lot more money. You might want to stop in here. And I'm like, oh, I must have did something wrong when I filled out the stuff for my bike. Maybe she could save me more money. I walk in the door, and it wasn't my car she was talking about. It was my bike and my renter's insurance. I was paying $600 and change for a whole year for my YZF 600R. She cut that down to less than half. It's like $304 for an entire year with full coverage with $250 deductibles. I was flabbergasted. So this lady, between the car and the bike and then the renter's insurance, saved me almost $1,300 a year. So yes, it pays to shop around and shop around often. You know, when you're younger, you know, your first big discount happens when you're 20. Well, not big discount, but you get a small discount when you're 20. And then you get a bigger discount at 25. The big discount is 30. And you do get one at I saw one at 35. I did not see one at 40. But generally, I believe it's about every 5 years. And so she saved me almost $1,300. And on my insurance, I saved another $300 a year switching from T-Mobile to Cricket Wireless. So now we're up to almost $1,600 a year. And I refinanced my car to boot. I'm 2 years into a 6-year loan on the car because I had to finance 6 years instead of 5 because I went in with no money down. Mea culpa, but so I got 4 years left on a 6-year loan, and I haven't refinanced it yet, but I'm getting offers right now. I got some offers online from Credit Karma, and I didn't want to give those companies business. So what I did was I took the offers they gave me, and I brought them to the local credit unions where I live. And I walked in saying, hey, can you guys beat this deal? And I know they're not going to beat it. They're going to act like, well, we'll try. And then they're going to come back and counter-offer me, hey, we'll match it, which is what I want to begin with. But if I just walked in saying, well, they match it, they'd probably say no. Just because. It's just the way they operate. So I'm waiting to hear back from them. But I could literally cut $1,000 a year off my payments for the next 4 years. So I could save $4,000 over the 4 years of my loan. I'm still going to have 4 years of payments left. I got 4 years of payments left right now. But when I refinance, I'm still going to have 4 years of payments left. But the interest rate is so much lower that it's going to save me just under $1,000 a year. So if you go back and add up, you know, between the insurance and the cell phone and now the car refinancing, I just saved myself over $3,000 a year in monthly payments. $3,000. That's a lot of money. You know, and I double checked, triple checked everything, and the numbers are correct. And it's like, wow, I'm like, these companies are just making, you know, they're making me way overpay. And I'm like, great, now I'm going to be saving over $3,000 a year. You know, and that's a lot of extra money every month in my pocket. So I've been taking that money and I've been paying off other debt. And it's great. I'm catching up on debt fast. So, you know, I don't have a ton of debt like most other people. I don't have credit cards. I pay for everything with cash or my debit card out of my checking account. I don't use plastic. I got in problems with plastic when I was younger, and I got way over, and I'll never do that again. I got one credit card that I use literally for emergencies, and that's like if I'm on a trip and I got like a major breakdown or something that's going to cost me money, I can pay for it. But other than that, it's like a strictly off-limits card. You know, it's only for dire emergencies, and that's the way it is. You know, I think everybody should do that. They shouldn't operate off credit. Operate off credit's bad. So, would that be a quick lesson to you? You definitely want to check your bills. You know, you don't necessarily need the latest and the greatest with your cell phone. Take an honest look at what your usage levels are, what the prices are. Go with something that's good. I will mention that Cricket off of AT&T has better coverage for voice calls. Their data coverage is also better as far as where you get data coverage. The speed of the data coverage is poor. compared to T-Mobile. But me personally, I ride a motorcycle. It would be nice to have the cell phone work in more areas. I've been looking into possibly getting a spot messenger or something else I could use on trips so that people know that I'm okay. Stuff like satellite phones, they're ridiculously expensive still. But something like a spot, although I like it, they charge $100 a year fee. And then again, I'm trying to get away and lower my monthly bills. So something like that you charge a yearly payment for, sorry, not going to buy it. Until the manufacturers learn that we want something where the service is a reasonable price. For me, $100 a year is not worth it. How many vacations a year does someone go on where they need the thing? You should be able to just activate it for a shorter period of time. Of course, they don't want you to do that. They want to make more money. So I digress. It's kind of related, but so check your bills, check your insurance, check your cell phones, car insurance, bike insurance, renter's insurance. If you haven't taken it, take defensive driving. That gets you a discount. Check on discounts for alarm systems. A lot of times the money you save with an alarm system, it'll save you the cost of the alarm system in 1 year of insurance. So check on that as well. Don't overlook anything. Defensive driving can now be taken online in a lot of states. So you don't have to actually go into a class. And it reduces points off your license. In some states, like in New York State, it takes points off your license. And it gives you a 10% discount. It takes off 6 points, and it gives you a 10% discount. I got my first speeding ticket in about 5 years last year, and I was due to take defensive driving, but I purposely had not taken it because, generally speaking, about every 4 or 5 years, I let my guard down and I get a speeding ticket. Probably like most people. So I wanted to wait until I got a speeding ticket and then take defensive driving. So that's what I did. When I got a speeding ticket, I immediately took defensive driving and had to pull right back off my DMV record. So my insurance, they couldn't check my insurance up when the 6 month renewal came up. Pretty sneaky, but it's something that I found out works to my advantage. And for once, I'll keep the money in my pocket, not the insurance companies. So hope that information was helpful to you guys. You want to chime in below with your comments on your insurance and whatnot, and what you've learned, tricks of the trade over the years. I'm happily, this bike is happily paid off. I got a 3-year loan on it. It's all paid off, but I still run full coverage on it because the bike's still worth, over $4,000. And if I wreck it, I want to be able to get another bike. I'm not a super mechanic, so I might not be able to fix it with a salvage title. I might have to get a new bike. If that happens, I want to check for what the bike's worth so I can use this as down payment on another bike, So chime in down below with what you guys got and let me know what you think. Talk to you later.